Good morning, everyone, and thank you for joining us today. Today's presentation is entitled Creating Financial Harmony, Living Together, Engaged, and Newlyweds. And this one-hour session is being hosted by Counselor Buchanan and Mitchell and Kelly Haynes and Associates. Our presenters today are Abby Niehoff and Rebecca Weaver. Abby is a divorce financial specialist at Counselor Buchanan and Mitchell. She has worked in the diverse financial planning field for almost 4 years. She's currently working towards obtaining her CFP certification and her CDFA certification. She has her master's degree in paralegal studies from George Washington University. Abby works on the divorce financial planning team at CBM and works with couples who are going through a divorce to help them make informed decisions about their assets, liabilities, budgets, and their cash flow so that the couple can achieve a mutually beneficial settlement that works for both of them. Rebecca Weaver is a clinical social worker and psychotherapist with Kelly Haynes and Associates, who has been practicing in the DC area for over 10 years. Her expertise includes working with adults in individuals, couples, and group therapy. She has done postgraduate training at the Washington School of Psychiatry with a concentration in couples therapy. She works with couples in all life stages with a specialty in premarital counseling. I would ask you please, attendees, to please keep your video off today as a courtesy to our presenters. Thanks to you who have submitted questions beforehand during registration. They've been routed to our presenters and will be covered during the presentation. If you do have questions during today's session, please do use the chat box. The presenters today will be focusing on the content, so they will be holding questions or responding until later on at the end of the session. If we don't get to your question, please feel free to follow up. The session is being recorded, and the presentation slides will be sent to attendees after the meeting. If you are attending using your phone number, please do send your name and your phone number to Austin Schweber, who emailed you the meeting access link, and he'll. And with that, I'd like to turn this over now to our presenters.
I thank you so much, Joe. So really, I wanted to put this presentation together just because the divorce, as a professional, I have seen so many couples get divorced for a whole slew of reasons, but I've noticed that really one of the most common contributing factors is money and the problems that come about from the lack of communication really about their money. And that got me thinking that how many of these couples could have avoided being here if they had had that conversation early in their relationship and really just set that foundation for open and honest communication about their finances. And I thought it would be a great opportunity to have Rebecca co-present with me today, just to really share her observations and expertise that she's made while working with couples, and really just share different ways to effectively communicate with your partner about these topics that are often hard to talk about.
Yeah, thank you, Abby. I am so glad to be here today. As Abby said, money is something that really can cause conflict in relationships. I've seen that in my work, and I'm just so happy to be here today to sort of discuss and kind of share some of what, how I work with couples to navigate these tough conversations.
Thank you, Rebecca. And so this slide, this is just a funny picture that I found and really sets the tone about how this is going to be just different uses and techniques to give you for just different options of how to handle your finances best throughout your relationship. But what matters really most is what works for you. And we're just here to give you the tools to make this as easy as possible. So it is really going to vary from person to person. So just keep that in mind throughout the presentation. So the best place to start really is to ask yourself, are you willing to have that open and honest discussion with your partner about money? And if you are willing to talk about your current and ongoing financial status, it will build trust within your relationship. And different things you can talk about are your assets and what assets your partner has. And that would be things such as bank accounts, investment accounts, retirement accounts, valuables, cars, etc. And another thing to talk about would be debt. So that would be student loans or credit card debt. And you should talk about your income if you and your partner have good or bad credit history, and if you're a saver or a spender. And for example, if you make significantly more money than your partner, you might worry that they're just seeking a higher lifestyle, or in other words, gold digging, especially if they are more of a spender. And Rebecca's going to touch on that whole saver versus spender mentality later on in this presentation. So You really should try to find a comfortable time to sit down to have a relaxed conversation, and you should not wait until your partner has maxed their credit card out to start talking about the problem. The goal here is really to have a relaxed discussion when there is no issue or particularly money issue at hand. And you should volunteer your own feelings about a financial issue, and that in turn really will encourage your partner to do the same. And remember that your relationship is the #1 priority, and you'll both have to be willing to negotiate. So you should share your feelings and your experiences and your hopes about money, and discuss how you've dealt with it in past relationships and what's worked for you and what didn't work for you, and just your whole experience with that. And Rebecca is going to share just a bit about how money was handled when you were growing up and how that really influences how your feelings toward money are now and really what money means to you next.
Yeah, thank you, Abby. Yeah, it's so important, when we think about money to really think about, okay, what are we really talking about? What does money really mean? And we, of course, we learn about what money means from how we grow up, from our institutions, from our family. So there are some questions to just sort of get you started to be able to have these conversations. In so many ways, society, money is such a taboo topic. So many of us don't have a good model of how to start talking about something that's so important, but we've all also gotten these messages that it's not something you sort of talk about in a polite company. So then when we get into relationships, it's such a vital thing, and sometimes we don't have the tools. So it's so important to kind of have these conversations, early, and honestly, to sort of get to know, what does money mean to each of you? It's so important for the health, both of your financial health and the financial health of the couple. So these are some questions that can really get you starting to think about it on a deeper level. And then I think the next slide, we have some more questions. So the most famous couples therapist right now is named Esther Perel. Some of you may have heard of her. I absolutely recommend her podcasts, her blogs, her books. She's sort of like all the rage right now. And I have taken these questions from her blog on how to talk about money with your spouse. And I really highly recommend, kind of taking a look at these questions. I think it's so important that we have some basis to kind of feel, how can we open up space? How can we start to really talk about it? And how can it be a fun thing, not just sort of like a slog? There's one question on there. If I spent $100 on something and didn't tell you, would you be upset with me? How about 1,000? A lot of times premarital counselors, recommend, or, these different classes you can take, recommend coming up with a number, I won't spend this much unless I check with you. Would that work for you and your partner? Talk about it. How would you feel? It's very likely you'll learn something that you didn't know. I have a couple right now who is, in the midst of planning a wedding. And, not only planning a wedding, they say, is, sort of the first test of the marriage. And not only are they planning a wedding, which can be stressful, but they're doing it in COVID times. So it can be really hard, to have these differences of opinion. We're going to have these differences of opinion and think about, okay, what is important to you? What is important to me? One person wants to spend money on the videographer. One person thinks the food is the most important, to kind of think and to kind of talk about these things and have this idea of, what is most important to us? What are our goals? And, I think that it's really, to come up with compromise can really be easier if we have this base of these conversations.
Yeah, that's very true. And navigating a wedding during COVID, I can imagine, is a nightmare. But thank you. So as I had mentioned earlier, it is important to be honest with yourself about how you feel about just certain money situations. For example, if you've always been more independent, it might be hard for you to feel as if you're being taken care of financially. So if you have more assets than your partner, you might fear about risking your hard-earned money or harboring some sort of resentment if their spending habits really aren't the best. And again, you have to be honest with yourself about these feelings in order to be able to be honest with your partner. And if you're uncomfortable just talking about this on your own, it is always a great idea to seek out a professional just to help you sort through these financial issues. And the professional really could be a financial planner, it could be a therapist, it could be a marriage counselor. It really varies on you and what you want. And next, Rebecca is going to share some tips for just having a potentially stressful conversation and how best to handle that.
Yes. Great. Thank you, Abby. Yeah, so I think, here are some things to think about to sort of open up that space between you and your partner. Number one, take a stance of curiosity. It's so important. This, you are learning more about your partner through this process. This is a fun thing. This is can be a really great way to sort of open up more space, deepen your relationship, get to know your partner, get to know, how, all of these different things that happened earlier in their life, how they view money. The second one, which is so important, assume best intentions. This comes up so much in my work with couples. Sometimes, when it is sort of a difficult conversation, our walls can go up, we can get a little bit defensive, but this is your partner. This is the person you love. You are on the same team. So I find myself saying that on a daily basis in my work. So, remember that the other person, is your partner. They want you to succeed, and keep that in mind when you're having these conversations, and if they can get heated in some parts. And also remember, there's no right and there's no wrong. It's normal to have differences. Opposites attract, and a lot of times, those of us who are, spenders will really kind of pair up with someone who's more of a saver. And that can cause conflict, sure, but it also can be a wonderful way to balance each other out. So sort of really understanding like, oh, this is a great thing. You guys can help each other. You can be a partner, you can be partners, and what can you learn from each other? It's a really good attitude to go into this with. I also wanted to mention, in the meaning of money, there's a great tool that I often recommend to my couples. It is called the 5 Love Languages. Many of you have probably heard about this. It's a little book. It's also just a website you can go on. We have it listed in the resource pages, and it'll give you, there's a little test. It'll give you sort of a way to figure out like, how do I feel loved? How does my partner feel loved? And it can be sort of a fun and a nice way to, start having some of these conversations. Also sort of going on in the meaning of money, obviously the value of money lies in what it represents to each of you. So really to talk with your partner about what that means. There's a whole spectrum. We've talked about the spender versus the saver, of where do you fall on this? It's so important to have these conversations and to know if you fall, inevitably you will fall in a different place, and that's not a bad thing. How can you learn from each other? And really having those goals of, how do you want to spend money early in your relationship, sitting down? How do you want your money to be spent, saved, invested, donated? What is your vision? It's really important to kind of start thinking about those things.
That's true, and that really ties into what your goals are. So on the screen, you can see a number of common goals and topics that a lot of people have, and it's important to note that you will need to revisit these goals every few years because they are going to change as your life progresses. And that really goes for any mutual financial agreement that you would have together. And you visit things, and it's key to be flexible as things change. As I'm sure a lot of you have seen with COVID, it is very important to be flexible with almost everything. And it would be a great idea just to schedule a business type meeting thing once a year, just to review your spending, your goals, and just to check in on how you're doing, how the last year has gone, and what you want to do going forward. And it is smart to schedule that so it just doesn't come up randomly at the dinner table, and it can just be scheduled and then you don't have to talk about it for another year. So you should discuss what your priorities are when it comes to these goals. For example, do you want to spend that money to just go purchase your first house, or do you want to pay off loans with that? What would be that down payment? And that varies person to person. All of these are really going to vary person to person. So it is dependent on what you want and what your goals and priorities are. Another one would be, do you want to have kids one day? And if you do, would one of you like to stay at home with the kids? And you need to consider that children's expenses and childcare are expensive. And would it be worth it really to have both of you continuing to work while one of your salaries is completely used up to pay childcare fees? And another thing to consider is, are one of you willing to actually stop your career and stay at home? And this is something that, again, will vary from person to person and is important to talk about. And I've seen this in numerous divorce cases where the wife had given up her career so the husband could go focus on his career and invest 100% of his time on developing that or a successful business. And because that was the mutual decision that they made together, the wife, rightfully so, she deserves a piece of that success that was really achieved because of that decision for her to give up or pause her career so she could focus on raising the kids. And the husband sometimes doesn't feel as if that was fair and that was his hard-earned money, but there's really no way to monetize the work the wife had put in as the homemaker, the cheerleader, raising the kids, and doing pretty much everything else other than just bringing home the salary. So those are just the things that you both will need to consider and be aware about while making that decision. And another thing to talk about is, how do you want your money to be managed and what do you want to invest in? Do you want to invest in the stock market? Do you want to invest in socially conscious stocks? Do you want to invest in real estate? How do you just want to handle your money going forward? And that's going to change as time goes on. And what are your priorities for discretionary spending? Do you want to travel? Do you want to go buy a big house and not travel so much? Do you want to go out to eat a lot? And again, these are personal preferences and will vary and are just something fun to kind of chat about. And this is the fun one, I think. So what are your aspirational goals? These are going to be things like, what would you do if you won the lottery and won, I don't know, $100 million? So that would be things. Do you want to retire at 35? Do you want to go buy a Lamborghini? Do you want to go move to a mansion in Malibu or own your own private island in the Bahamas? And that is one kind of fun way to bring in just a lighter topic into the money taboo conversations. And next, Rebecca is going to talk a bit more about what your vision is as a couple.
Yeah, Abby, I think that's it's a great question to have right above the thinking about your vision, because, you know, if you have that sort of that fun conversation about your aspirational goals, you know, that really leads to talking about, like, what do you want to accomplish as a couple? What is your vision for your relationship, for your future, for your life together? It's so important, and it can be so fun to have these conversations. There's a book that is listed in the resource pages. It's called Getting the Love You Want. And it is another tool that I am, you know, sort of highlighting for you. In the back of it, there is a bunch of exercises. And the first one is coming up with your vision, your relationship vision. So I use that often with my couples. And you know, a lot of them have really, you know, benefited from that. So that is one tool you can look at to sort of have just an outline if you feel like you need a little help coming up with that vision. You know, and as, you know, Abby was saying, sort of, I also recommend really having a State of the Union, you know, once a year, at least. You know, I do that, you know, with my husband, sort of talking about, okay, where are we, you know, in a bunch of different goals, including financially, you know, where are we? Is this where we want to go? What are our goals for the future? And really having that time to check in. How is it going for you? You know, how is it going for me? And kind of opening up that space. It's a really great opportunity.
It is, and it can be fun to talk about if you bring things in like that. Next, we're going to transition into more of the nitty-gritty stuff. And there are just really a couple do's and don'ts I want to point out about handling your finances before you get married, because, well, marriage can provide certain legal and financial protections for both you and your partner. And really, before you get married, you should keep your assets and debts in your own name. And that would include things like real estate, cars, bank and investment accounts, mortgages, car loans, personal loans, etc. And just really by combining and retitling assets before you're married, you create complex and potential really legal matters if your relationship ends. And you should not co-sign a loan for your significant other before you're married, as it could really, you could become liable if your partner were to default and your credit history could tank. And just really, on the other hand, you should share the common expenses. So if you live together, you would include rent, utilities, and other joint living expenses, either 50-50 or proportion to income. And I'll talk about that a bit later. And I really just, well, do want to mention that I don't want to say that it's not possible for you to have a joint asset before you get married. So if you do want to go ahead and buy a house together before you're married, by all means go for it. But it is smart to put the legal protections into place. So you might want to have a lawyer draft a home ownership agreement that has some sort of get out clause just in the case that you do break up, and just to talk about what the best way to title the house would be. And the agreement really would detail what happens to the house on the chance that you would break up. And so would one of you buy the other out? Would one of you keep the house, or would you sell the house? And really detail what amount are each of you putting down on the house, and what percentage of the mortgage and other household expenses are each of you planning on paying. So really, the more specific this agreement is, the better. And just remember, these suggestions are coming from the stance of a divorced financial professional. So I know it is hard to talk about the negative, just oh no subjects, but it is so important to address these things just in case, and just to have those protections there, just worst case scenario. So there are a few different best practices once you're married. So one of the most important things you and your spouse can do is to track your spending and commit to a joint spending and savings plan. Mint is a fantastic app to use to track your spending and to help establish a budget. So each of you should come up with your own spending and saving guidelines, and just try to establish some sort of a budget. And then you could allow your partner to manage their own personal spending. And another do of merging financials, or merging finances, is to designate a bill payer. So one of you most likely is better at the day-to-day money management, and this person should be the one who's designated as the bill payer. But the partner who isn't paying, doing the day-to-day, needs to be involved so they know what needs to be done just in case. And you should share financial responsibilities if you're both good at that day-to-day money management. And it is important to clarify who in that situation would be responsible for making the payment. For instance, you could be the one responsible for paying the mortgage, while your partner could pay all the utilities, and just making sure everything's covered. The third do is that you should at least have one credit card in your own name, just to maintain that separate credit history. And next, we're going to talk about the fun subject of buying your first house. So if and when you do decide to buy your first home, you should remember there are these first-time home buyer programs that they vary from state to state, and you should talk to your realtor about what is available for you. Another thing to consider is how long are you planning to live there? So if it's going to be short term, then the resale value should be kind of at the top of your mind. And if it's long term, and if you're planning on raising a family there, school districts should be on your radar. And it's also important not just to budget for your monthly mortgage payment. So you would need to consider things such as like closing costs, property taxes, homeowners insurances, utilities, furnishings, maintenance costs, all that good stuff. A lot of time when people are going to buy a house, they just consider what their mortgage would be, and there are a lot of other costs that need to be considered and budgeted for when making that decision. Also, when looking for houses, just look past the staging decor. Focus on the location, the footprint, the other unchangeable features of the house, and not just, oh, the pretty staging decor, because, well, ugly wallpaper can be removed, and that kind of ties into my next point of don't rule a good fixer-upper out, and because that gives you the opportunity to buy an affordable house in a great neighborhood, and that would give you more money to invest in the renovations of really your own choice, so you could end up realistically with the house of your dreams for a lot less money, which is good. Next, Rebecca is going to discuss her experiences with COVID and her clients and the whole first-time home buying process, and really also going to touch on what it means when things change and how being flexible is so important, especially in the COVID era.
Yes, definitely, Abby. It is, things right. The only thing we know about life is that the constant is that things change. And to be able to be flexible, I think that's why a lot of these questions are so important to kind of do early on, you have early on in the relationship. All of these things, Abby, like you're giving, they're just so important to think about. Our personal circumstances change. And, as we know now, the world circumstances can change. We're living in a pandemic, something that none of us could have predicted. So, having those check-ins about how are things going, is this working, is going to be so important, as well as just having that mindset like, okay, we can be flexible, we can adapt to, we can work together as a couple to, figure out how to move forward with whatever circumstances we find ourselves in. And talking about houses, I have a couple who had decided that they were going to buy a house in 3 years, and then COVID hit. And, one partner said, 500 square feet of apartment in DC is just not something I can bear with for another 3 years. The other partner felt like, well, I think it's important to make the sacrifice and keep staying here and save money, so we can get, the kind of house that we want. So that's certainly a conflict that no one could have predicted, even a year ago. So, they came and they kind of looked at what are their relationship goals, what are their vision, and they came to a compromise, and they realized that the health of their relationship, is more important than sticking to this plan that they've had. So now they have bought a house, and they have some more space, and it is really beneficial for the health of their relationship. So just a little example of how it's important to be flexible.
I can appreciate that. I am currently in that situation. I'm in a 1-bedroom apartment. We're like, do we stay here or do we buy a house? Because it would certainly be nice while we're both working at home to have a little bit more space.
Yes, COVID has really changed a lot of things.
Yeah, big time. So next we're going to talk about bank accounts and just different ways you can structure this once you are married. So there's really no one way that's going to work best for each couple. So it is smart to assess and think about what would work best for you and your relationship. So a few options are, well, the first being joint bank accounts, which makes it easy to just track your budgeting and your spending, and you don't have to reconcile your expenses at the end of each month, and no financial changes are really needed as your family grows. But with joint accounts, you may end up judging your partner's spending habits, which could lead to resentment, especially if one of you earns more money. And it could be hard to keep gifts a surprise because they can see all your transaction history and whatnot. So the second option is to have separate bank accounts, and that's where each of you is responsible for your own spending habits and paying for off any debts that you had brought into the relationship or marriage. And given you're both happy with how you've agreed to split the shared bills, this method of money management is usually the most fair. And you also may be less likely to argue over each other's habits and spending habits. And keeping track of who owes what does come down. It's a lot of work each month, and it becomes more challenging if you have children or if one of you wants to change careers or goes back to school or loses your job in this whole COVID era. So just to emphasize how flexibility really is important with those different life transitions and switches. And the third option is to have a combination of joint and separate accounts. So having that joint account and each of you keeping your own separate private accounts lets you track expenses and also creates fewer money arguments. So you each have the ease of tracking that you get with the joint account, and you don't have to deal with the whole income disparities while paying the bills. But you also both have the independence to buy what you want without discussing it with your partner first, unless, again, that's one of the questions or goals that you could come up with together. So as Rebecca mentioned earlier, how much would you be okay with spending $100 or $1,000? What is that X amount of money that you'd be okay without your partner asking you or telling you about first? And it is important to mention that this method is simple to track, but it requires more work since you have to actively open and manage several different bank accounts. And having an amount deposited into your personal account each month might feel like an allowance to some people, and it might rub you the wrong way. So that, again, depends on the person. And these are just 3 options that work for a lot of people and really are going to depend on what would work for you best. So next, Rebecca is going to talk about what she's seen work for people and what she has seen not work for people in this whole bank account arena.
Yeah, thank you, Abby. Yeah, it's so important. I mean, it's so nice that there's so many options, right? That's the good news. And what is going to work for you is really going to, it's such an individual thing, for the couple. Many of us are getting married, later. We're not getting married right after college typically now. So we sort of have some experience in our 20s of we have some sort of financial life already. So to kind of think about like, where are each of you? What is going to work best for you as a couple? And one thing I just think is so important is, and that I've seen in my couples, especially, the premarital counseling is, we are used to having roommates in our 20s and having this roommate mentality, this sort of 50-50 roommate mentality. And, that does not transition well to marriage or partnership. Roommates is 50-50, marriage is truly 100-100. So it's important to really start getting that mind shift, from a, individual roommate mentality to sort of having a couple mentality. Having a sort of a couple state of mind, putting someone else's needs and the needs of your relationship before your own. I think that, I have a couple who, in session who is arguing about dishes, and it's so important to kind of realize, sure, if you had a roommate, you sort of split things up. But sometimes in a marriage and a partnership, your spouse is going to have had a really long day. And you're going to say, you know what, today I'm going to cook and I'm going to do the dishes because I'm just going to really be serving my spouse in this way. And at other times, you'll be the one that really needs someone to kind of step up and really, help you in that way. So, sort of getting your mind around this shift of how do you serve your partner is really important to start thinking about.
Yeah, I agree. And the whole 100-100 thing is just important to remember through all of this, and the whole emphasis on your relationship should be the number one priority. All of this other stuff is important and helps you build that foundation, but just put each other first and don't point fingers and whatnot. So next we're going to talk about establishing a joint spending plan. So you should track your monthly expenses and have an open dialogue with your partner about really the day-to-day spending. And as I had mentioned earlier, Mint is a great app for doing that, and it makes it super easy. You link your bank accounts to it and you categorize your monthly, well, it categorizes your monthly spending so you can see how you're actually spending your money on some things, which isn't always the most fun to look at and be quite a shock, but it is good to have an eye opener if you need it. So it's also important to be honest with your partner. And if one of you is spending too much, talk to your partner about it and just don't point fingers. Don't make it a huge thing and just have that relaxed discussion that we mentioned earlier. So next we're going to talk about how to share expenses. So again, these are three just different general methods of doing it. So the first is the separate but equal approach, which is essentially just having a separate bank accounts, separate credit cards, and just splitting the expenses right down the middle. So one person typically pays up front and the other person reimburses you for half of it, or each of you would pay different bills that are just reconciled at the end of the month to achieve that 50-50 split. Another way to split expenses would to do it in proportion to income. So this method really is exactly how it sounds. So for instance, you make $200,000 a year, your partner makes $50,000 a year, and your monthly mortgage payment for this example is $2,000. So you would pay $1,500 of that and your partner would pay $500 of that. So exactly the same percentages of what your income would be. So the third method is what we call the free-for-all. This isn't recommended. In this situation, one of you would pay the large bill, let's just say, again, the mortgage, and your partner would end up paying for everything else. And in this example, your partner pays for all of the other expenses and ends up actually paying more than you, while you also are building that equity and could be getting a tax benefit for paying the mortgage and the mortgage interest, while your partner is just kind of throwing that money away just by paying all the expenses and really not building any equity. And that example is really geared towards those of you who have or are planning on buying a house before you're married. And again, if both of you are okay with taking this approach and doing that, this arrangement could work. However, we've seen a lot of times that this method of doing things could be a problem. And just another question really for you to consider is, should the person who makes significantly more money than the other pay a larger percentage of the monthly expenses? And this is a decision that you should make as a couple. And if you and your partner do lead a modest lifestyle and it's affordable for both of you to pay the joint expenses 50-50, the whole separate but equal approach may be fine. But if the person who makes more money has really more expensive tastes, takes extravagant vacations, wants to buy the big house, wants to go out to eat every day, then it may be more appropriate to do it in the proportion to income so you aren't straining the person who makes less money. And really, as I mentioned earlier, this is one of those things that is going to progress and change over your life and needs to be revisited. So say whether one person changes careers, if someone loses their job, if someone wants to be a stay-at-home parent, or if one of you inherits the money or a lot of money or wins the lottery, it is going to be important to be flexible, especially now with COVID and the whole unemployment problem that we're seeing a lot now. So next, we're going to get into some money mistakes to avoid. So there are a lot of money mistakes you and your significant other really should try your best to avoid. But the most important being you can see on the screen. So the first being not setting the mutual financial goals, or not making time really to talk about your finances. You shouldn't hide money. And this is something we see a lot in the divorce line of work, unfortunately. So you shouldn't keep your debt a secret. And being in the dark about your significant other's finances is a hard one. And Rebecca is going now to talk about addictions and how that kind of ties into being in the dark.
Yeah, I think it's so important, the not keeping secrets, and the early, often, and open conversations. I see in my work a lot of times where addictions can come in, whether it be shopping, gambling, alcohol, and drugs. That has a huge impact on the financial life of the couple, obviously. So really, like, kind of any patterns that you notice, talking about them, having some idea of each other's, financial history, as you've, touched on, Abby, is really important in sort of like just really having that open and honest talk to kind of know, okay, I can count on my partner, and, kind of see any little things that arise early on to talk about.
Yeah, that's so important. And next, back to the list. So letting your emotions drive the financial discussions and really letting anger drive it is a huge mistake to avoid. And of course, you're going to have emotions that are behind what you're talking about, but you shouldn't let the negative emotions really run the conversation. Another one is to rushing into a joint account, and that is mainly for people before they're married. And trying to keep your finances 100% separate. So I was actually talking about this with one of my colleagues the other day, and she had shared that you should try to be financially married in at least one area. So that could be a joint mortgage, a joint bank account, a joint credit card, anything like that. And she had shared an observation that she'd made working with couples. So couples who really try to keep it 100% separate are or may be more likely to get divorced, because for some reason that whole being financially married thing incorporates some form of intimacy, which is quite interesting and it proves true in my opinion.
Yeah.
So really back to the list. So not establishing spending rules, that's a mistake. And then the last one, so thinking that you can change your significant other's bad money habits, which Rebecca is going to share more about and where that actually kind of stems from now.
Yeah, I think it's so important, Abby. And if you, don't remember anything else I've said today, I think it's so important. Money conflict is rarely just about money. It is, a sign of something else that is going on underneath. If you have, arguments about someone that is, spending too much, whatever it is, it's so important to sort of look underneath and like, what is that person, missing from their life that they're sort of, covering up with, the spending, whatever it is, to kind of like, take a step back and look like, okay, what is really going on here? Because it can be really hard to change our habits. So to be able to sort of like have these conversations, to think like, okay, what is the root of this? What is really going on? What really needs to happen, to figure out how I can help my partner, get his spending under control. It's really, like, we don't want to make the mistake of just sort of looking at the surface issue. We want to really look underneath it and be curious.
Yeah, I think that proves true really in other aspects other than money and everyone's relationship, really. There's always going to be that underlying thing that needs to be addressed.
Absolutely.
So next, here are just some general tips. It is important that you and your partner build that emergency fund. And as just a general rule of thumb, that should be made up of 3 to 6 months of your fixed living expenses. And that emergency fund should be kept in a liquid account, as we call it. So that's where you can easily access it, such as in your savings account, your checking account, or in a money market account, just not somewhere that's going to take and be a whole process to access it. It's also really important to plan for the worst. And around the time of your marriage, it's a good idea to exchange documents like credit reports, a couple years of tax returns, and just a summary sheet of your assets, your liabilities, and just the backup documents that tie into that before you're married. So that would capture your premarital assets, which are, again, your separate assets. And it is also important to know if your partner hasn't been paying their tax returns, I don't know, for the past 5 years. And that wouldn't be a fun surprise you would want to know about before you walk down the aisle, but you would want to know that before you walk down the aisle. Really, as absurd as that sounds, I have seen a case where the wife never asked to see the taxes and the husband hadn't filed their taxes. And the past 5 or 10 years, I want to say, that's not something fun to deal with. They ended up having to pay a lot of money. But another one is you also might want to discuss having a prenup before your marriage. And Rebecca's going to touch on that shortly. But that is one that is common in this area, and especially even more common in second marriages. And the next point, you are going to want to review your life insurance, your disability insurance needs, as well as your beneficiary designations once you are married. And it is a good idea to meet with an estate planning attorney just to complete your wills, healthcare proxies, financial power of attorneys, and just have a financial planner look over those documents once they're done, just to make sure everything is set up in the most efficient way possible. And that's a whole nother presentation, so I won't go into that anymore. So really, and now since you'll be filing your tax returns as married, it is important to review your withholdings and just different tax considerations so you're not slapped with the giant tax bill come April 15th. And then we do have a financial planning checklist that details all of this nitty-gritty stuff out. So if you are interested in taking a look at that, shoot Joe or I an email and we'll be sure to get that to you. And also we have budget forms, so that just point out a lot of different items that you might not necessarily think about. So again, if you'd like that, let Joe or I know and we can send that to you. And really, as I've said about 8,000 times probably in the last hour, the most important thing to really remember from this is just to be open, neutral, and honest with your significant other about money. So really, if you can do this, it's going to build the trust and you will learn from one another. And that will build an even more solid foundation for your relationship going forward and really set you up for financial success going forward and success in many other areas if you just take that lesson and apply it to different things. So last but not least, Rebecca is going to talk about prenups a bit and just discuss the whole trust process.
Yeah, that is so important. Thank you so much. Prenups, as Abby said, they're very common in the area. I see that a lot in my practice. And again, we're echoing the same thing, having these conversations, sort of like early, open and honest conversations. I have a couple who, one of the partners wanted a prenup, but he didn't mention it until after they were engaged. So this is something that that can be an important tool, but you're going to want to mention it sort of early on before you go through the engagement process to sort of talk about the meaning of it, why this is important, and really so both partners can feel really on the same page. And they can really, really is part of that building trust process, right? And we build trust over time. It's really, seeing, these repeated, events and instances where our partner really shows up for us. Our partner comes through. We can rely on our partner. This is a process that is, comes with time. And so to have that time to sort of build that in and really, build that sense of security with one another is the foundation it's a really important foundation. And it is a good foundation to build your marriage on.
Very true. Thank you. So here are some resources that Rebecca had mentioned throughout our presentation.
Yes, the five love languages is a website that you can go to, and it's a pretty quick little quiz, and it can be a fun thing to do. Getting the Love You Want, that is the book that has the exercises, the vision for your relationship in it. And also there's the link to Esther Perel's blog. And that is where I took the questions from one of the previous slides. So that's something you might want to look at too. And finally, I'm just sharing a quote that I really love. It is from a psychoanalyst named Erich Fromm, and it says, "Love isn't something natural. Rather, it requires discipline, concentration, patience, faith, and the overcoming of narcissism. It isn't a feeling, it is a practice." And this is something that I just wanted to leave you with, something that comes up in my work on a daily basis. Our feelings of love can come and go, right? There can be like a weather pattern. Our feelings come and go. But, love is really a practice. It is something that we do every single day through our actions to show someone that you are going to be trustworthy, that you care about them, and that you really are willing to put them and the relationship above your own needs.
Yeah, that's very important. And I think this quote really does a great job tying up everything and wrapping it up, and just a good lesson to take forward. So these are just some of the sources we pulled the information from. So if anyone is interested in reading more about it, these are some great websites. These are some of CBM's upcoming events. So if anyone is interested in attending the future ones, just go ahead and click on this link. I know Joe's going to circulate this presentation after. And last but not least, coronavirus resources. And last but not least now, we're going to address the questions that were sent in. And if anyone has any questions that didn't get a chance to send them in, please type them into the meeting chat, and we will, if we have time at the end, we will get to them. So we got this question actually a few times written in. So how do you address conflicting financial goals? For example, spender versus saver, retirement, etc. And there's actually a book on this exact subject called Money Harmony, a Roadmap for Individuals and Couples by Olivia Mellon. So if anyone is interested in reading more about that exact topic, I would recommend that book. And just kind of a lesson to bring with going on with this question is communication is going to be key here. And if you really can't seem to come to that conclusion on your own, as I mentioned during the presentation, it is smart to seek out a professional just so you can work through the conflicting goals and just be able to come to a compromise. And also, we sometimes do co-mediate with both financial professionals and mental health professionals just to kind of look at that issue from both sides of the conflicting problem and just help you work together to get to the compromise. And sometimes people going into a marriage and engagement, and even they think that they're both savers and they're both spenders, which we usually talk about the spender versus saver, but sometimes it's saver versus saver, spender versus spender. But often they find that they are on the opposite edges of the spectrum. So that's an even more interesting one to look at. So say someone saves everything and the other person has a good savings plan, but then they need to be able to meet on the middle to just kind of be able to go forward and achieve the goals that they've set for themselves. So another question that we saw just kind of written a little bit differently was, so how do you handle it if you and your partner have completely different upbringings, values, priorities about money, and that they've both been married before, and they are in their 40s and 50s, so the habits are more well ingrained. So one of them is a saver with a lot of assets, and the other one has no assets and is a big time spender and has significant amounts of debt. So what are some of the steps that we can take to have the saver not feel as if they're providing stability and have the potential to be taken advantage of, and the spender not feel as if they can't have any fun and are constantly under a microscope? So again, with this one, communication and compromise is key. And we do see this a lot in our line of work. And as Rebecca mentioned, opposites do tend to attract. So it's not only you. And with this situation, I would recommend consulting with a professional, whether it be financial or marriage counselor, just to help kind of work through these challenges and to put in really a plan into place. And again, the Olivia Mellon book that I've mentioned, or her website, actually address this almost to a T. So I would recommend looking into that book or website. So another question that we got is, so what are some of the things to take into account when both members of the couple are divorced or have kids from another marriage? So that one is really going to differ on if you're married or not. So I would consider doing a prenup or postnup, depending on if you're already married. And that would just kind of serve as a blueprint or guide on how you're operating together. And just because this one in particular brings into those multi-generational conversations and how you'd want certain things to work under different circumstances. So again, that's just going to have to be a conversation with a professional. Really would be probably the best, just so you're both on the same page, just so you're on the same, like, I don't know, headspace guide on what you both want without bringing into much, I don't know, animosity in that, just so it's smooth going forward. And we had two very similar questions written in next. So the first being, what about when one member of the couple moves into a home owned by the other? And the second question, what do you advise couples who are marrying later in life when one moves into a house and the other bought 10 years before? And should the new spouse be added to the mortgage that the spouse, or if the spouse intends to also put money towards the house, for example, for helping to pay for the mortgage or renovations, or should stipulations just be made on the other financial documents about ownership of the house or leaving it in a will to the surviving spouse? So again, this is something we see a lot in this line of work and is often a big stressor. And this is, again, going to vary on whether you're married or not. So you should really lay out what the contribution of the person that's moving in will be. So for instance, are they going to pay rent? So what happens if there's going to be a big repair, or who's paying for what? And what about what's going to happen to the tax deductions? And you really need to sit down and have a discussion about really the best way to proceed. Maybe you retitle the house or have some sort of spreadsheet detailing who's contributed what, just in case. And that could really, you could contribute more to, or the person moving in could contribute more to the mortgage each month until that equal equity is built, and you could retitle the house to be joint. Again, this is really going to vary from person to person. So having that conversation with each other about what is going to work best for you as a couple is so important. So another question we got is, if a couple is coming into a marriage with significant assets and decides to keep most assets separate but open that joint account to pay the mutual bills, what's the best way to determine how much each spouse would put into the joint account when one makes more than the other, and if it's more fair to do a percentage of income or 50-50? And we touched on that for a bit in the presentation. And again, it's going to vary on whether your income, or what the difference of your income is, and if your lifestyle is going to strain the person who makes less money. Again, that's just going to be a discussion you have. And when there are significant assets involved, I would suggest getting a postnup if you're already married, or a prenup if you aren't. And that would really just address questions such as, what happens to the house if one of you dies? Because the kids could come marching back in claiming it's theirs, but hopefully that wouldn't happen and it would be smooth. But and you also have to look at just like the titling and have that conversation on specifically what both of you want to happen with the house, and just really have that either detailed out And again, a post-nup or your estate planning documents, just so it's clear and there's no questions, God forbid that happens. And third, there was another question within that one that talks about long-term care, and that one really is beyond the scope of today's presentations, but I encourage whoever had written in that question to reach out and we can have a discussion about that more specific situation or question. And Rebecca's going to talk about this last one about how to change talking about money and finances from taboo and an unpleasant topic into something that's fun for the couple.
Yeah, that it's such an important question, and I hope that was addressed in the presentation. But just to highlight that, I think that 5 love languages, kind of, doing that quiz with your spouse, kind of saying, okay, well, what score did you get? What are your top 2 love languages? What are my top 2 love languages? Can be a fun way to start it out, using those questions that we have in the presentation. To kind of get to know, like, oh, how is money handled in your house? This is how it was handled in my house. It can be, that question that Abby had asked about. So, okay, if you win, the lottery, how would you want to spend the money? It really can open up space to talk about sort of what is your vision, what is going to be, how do you want to spend your money? It really talks about kind of what is our vision for our life together, and that is a fun way to do it, to break down some of those sort of taboos. So I really suggest using a lot of those questions that we gave as a guide for you.
Yeah, and it can be fun, and it doesn't have to be taboo, and it can be, you can make it fun, which you can do in really any harder aspect. Just look at it more positively, and it will be okay. So if anyone has any more questions, please write them in. So I guess if there's no more, so just thank you all so much for attending today, and I hope all of you were able to get something out of this discussion. And if any of you have any additional questions that we weren't able to get to go over today, or have just really specific questions, please feel free to reach out to Rebecca or I. Again, thank you so much for coming.
Thank you.